Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, February 6th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. Here's a look at the daily time frame of the ES. Right now, inside day at the moment. The previous session also finished inside day. We had a very nice strong high, strong low, and a pullback to the midpoint of that range. So kind of a key range from Friday's session here, keeping prices in check. Today's pre-market range right now just 17 points, which is 34% of average. This market's been averaging 60 points over the last 5 sessions and 50 points over the last 10. But right now clearly stalling a little bit here at these highs. Still very bullish directionally overall. And again, this market able to stave off selling pressure and bounce back quite well. Again, any signs of weakness would come in the form of breaking back through this LVN here. So we could drop into this zone, still see strength. We fail there, we open up 4,700. We've been talking about that structure for a while. That structure remains intact. We just came shy of the 5,000 level on Friday. Perhaps we come and get that level here fairly soon. So again, this market remains directionally bullish, and it's hard to sell into the strength right now while lacking some sort of strong rejection. We need a strong rejection here for bears to be able to sell into. Otherwise, this market remains quite bullish. Any pullback could still be a buying opportunity until proven otherwise. The 5,000 level is going to be very important here, as it is a major market structure edge. 5,000 here, 4,600. That's the level. So if we do see an eventual rejection at 5,000, not only would we return likely back toward the middle of the market structure range at 48, we could see a pass through 4,600, and then we could make that move right back up. That's very similar to what happened from 42 to 46. All right, let's take a look here at the NQ. NQ also remains quite compressed here today. Not an inside day. Did finish the previous session with an inside day, but here 98.5 points of range, 40% of ADR at the moment, and testing the previous session's high. Now, there could be an opportunity here where you see perhaps an outside day down and test the low and then bounce back up. So it could be a brief outside day, as this market could test both edges of the previous session's range, given that the previous session had a relatively narrow range, about 80% of average range yesterday. So we could see price test both sides but remain mostly bullish within this uptrending market. So again, very strong overall. No real signs of failure. Any weakness has been batted back up. And again, that LVN right there is the pathway to more weakness ahead. If there were to be a failure at that level, it would open up lower levels down below. As of right now, very, very strong still as this market continues to trend higher. Looking at crude oil, this one's up about 0.8%. The previous session here, finding an ability to bounce off of the previous year's close price. That area has been bid so far in January. This market rallied all the way up to 79s and then fell all the way back to 71s here to test that level. So a deep pullback. While it wasn't the strongest rejection off the lows, it did turn off the lows quite nicely here. And now we're seeing a little bit of a check mark move higher, holding the midpoint from the previous session. So quite bullish here in the very near term. Can prices continue higher here and push back through the previous month's midpoint, or do we start to see some form of failed new high and failure and work our way downward, as this trend remains quite bearish in the very short term? Just by the fact of falling back below 76s here, you fall back into this previous box right here. So to fall back through that level, we could continue to remain between 71 and 76 until proven otherwise. Now, overall, seasonality tends to take us higher in February, higher in January. But again, a very bearish start here to begin February. Can it bounce back and recover the 74 level? All right, let's take a look here at gold futures. Gold right now is about break even on the day at the moment. 9.3 points of range. That's 39% of average range inside day at the moment with a downward bias. A big time failure on a retest of 2080. Another rejection here off of the previous year's close price. and now we're trading back toward 2040, which is kind of the midline between 2080 and 2000. That's the range right now that continues to be in play, especially between these two major extremes. The fact that we're rotating down could bring us back toward that 2000 level as we continue to be range bound. So right now, short-term bearish, and if we start to fall through the 2040 level, it opens up a retest back toward the 2000 level below. All right, looking at the YM. YM right now remains bullish overall, but had quite a bit of weakness in the previous session, outpacing the ES and the NQ downward. Had a huge impulse move down, which is basically this previous session's high and low, bounced back to the mid and gave us a fairly solid key range. So that's a wide intraday key range right there of nearly 500 points. And those are the edges to watch. If we come down here and test the low edge, it could fade back up. If we come up here, test the high edge, it could fade back down. Eventually, a breakout from that range opens up a 500-point move to a target equidistant to the key range. Overall, this trend remains firmly intact. Very, very bullish. We have bumped up against the next highest 38,800 key level here, and you have a 1,000 point spread from 37 to 38. You push through 38.8 and you start opening up 39.8. So that's going to be the level that opens up the upside. As of right now, we're kind of in the upper half of that range within a very bullish trend. Super, super tiny intraday range right now heading into the RTH Open. And that could continue to be much of the day's price action, meaning mostly narrow overall, as today's economic data not really there. We do have FOMC member Mester speaking at 11 a.m. Central, and at 12 p.m. Central we have FOMC member Kashkari. So there could be some Fed speak later on that provides some volatility. Overall, still quite bullish. Any pullback could still be a buying opportunity until proven otherwise. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.